Hey everyone, welcome back to Talk Tickers. Today we're breaking down Adobe's Q4 2024 earnings call.
Ooh.
And let me tell you, this one has got some twists and turns.
Yeah, some twists and turns for sure.
You send over the transcript, the stock summary, some news coverage, and on the surface, it looks like Adobe had a stellar quarter.
Absolutely. Record revenue, massive growth in their digital media segment, their digital experience business hit a major milestone. There's a lot to celebrate.
Right. But then the stock takes a 9% dip after hours.
Oh, yeah.
That's a pretty dramatic reaction. And it suggests that investors saw something they didn't like. So what's the disconnect?
Well, one key factor is Adobe's revenue guidance for 2025. Even though they beat earnings estimates for Q4, their projections for next year fell short of Wall Street's expectations. And that seems to have spooked some investors who are anticipating even more aggressive growth.
Okay, that makes sense. Adobe has been on a tear lately. Much of it fueled by their aggressive push into AI. Maybe the market is worried that this incredible growth spurt is starting to taper off. But before we jump to conclusions, let's dive into the numbers. Give us a quick rundown of the key figures Adobe reported.
Sure. Adobe reported $5.61 billion in revenue for Q4, which represents an 11% increase compared to the same period last year. They also added a record $578 million in net new digital media annualized recurring revenue, ARR. Essentially, that metric tells us how much new revenue they're generating from subscriptions to their creative software products.
Okay, so that tells us their core business is still very strong. And what about their full year performance?
For the full fiscal year 2024, Adobe brought in a total of $21.51 billion in revenue, another all-time high.
Wow.
And even their digital experience business, which focuses on marketing and analytics solutions, crossed the $5 billion revenue mark for the first time ever.
Wow, those are some impressive numbers. It's really hard to see any weakness in those headline figures. So let's go back to this concern about slowing growth. Is there anything in the transcript or the news coverage that sheds light on why investors might be feeling hesitant?
Yes, a couple of things stand out. First, there's a sense that the market has really high expectations for Adobe, especially when it comes to their AI initiatives. They've been making bold moves in that space, and investors are looking for those investments to translate into significant revenue growth. So even a slight slowdown can be perceived as a negative signal.
And
Second, Adobe's business is heavily tied to the overall economy. When businesses are confident and spending freely, they're more likely to invest in Adobe's products. But if economic conditions worsen, companies might cut back on those expenses, which could impact Adobe's growth.
So it's not necessarily that investors are doubting Adobe's execution or innovation, but rather they're weighing the potential impact of external factors, like economic uncertainty. That's a really important nuance to understand.
Exactly, and it's a reminder that even the most successful companies can be vulnerable to forces outside their control.
Okay, so we've got the financial picture. Now let's dive into the heart of Adobe's strategy, AI. They're betting big on AI becoming the core of creativity at every level, from individual artists to global corporations. What exactly is Adobe doing in this space?
Adobe is going all in on AI, specifically with their Firefly generative AI models and the Gen Studio platform.
Let's break those down one by one. Firefly. Been hearing a lot about this lately. What makes it so special?
Think of Firefly as a suite of AI models that can handle imaging vector design and even video. It's deeply integrated into their flagship apps like Photoshop and Premiere, which professionals rely on.
So instead of manually editing images or videos, Firefly can help you generate and manipulate content using AI. For example, could I use Firefly to automatically remove the background from an image in Photoshop?
Absolutely. Or you could use it to create variations of a design in Illustrator, or even generate animations in After Effects.
Wow, that sounds incredibly powerful. But we've seen other companies rolling out their own generative AI tools. What makes Adobe's approach different?
That's a great question. One of the things that Adobe is really emphasizing is what they call commercially safe AI. And that's a key differentiator in the market.
Commercially safe. That's an intriguing term. What does it mean exactly?
It boils down to the data they're using to train their AI models. Adobe is being extremely careful to use data sets that are less likely to infringe on copyright. This is a major concern for businesses who are worried about potential legal issues when using AI-generated content.
That makes a lot of sense. If I'm a business using AI to create marketing materials, the last thing I want is to get sued for copyright infringement. So Adobe is trying to offer a solution that mitigates that risk.
Exactly. And that's a big deal for companies who want to leverage the power of AI, but need to operate within a safe legal framework.
Okay, so we've got Firefly, which is all about empowering creators with AI tools within their existing workflow. Now, what is Gen Studio all about? You mentioned that earlier, but I'm still not entirely clear on how it fits into the picture.
Gen Studio is a bit more complex. It's essentially a platform that aims to connect all of Adobe's creative tools with their marketing and data analytics platforms. Imagine being able to use AI to not only create content, but also personalize it at scale and distribute it across different channels.
So are we talking about something like if I'm a company selling athletic wear, I could use Gen Studio to create personalized ads featuring different products based on someone's browsing history, or even generate custom designs for each customer.
That's the idea. Gen Studio is about enabling businesses to produce and deliver highly targeted content that resonates with individual customers.
That's a pretty compelling value proposition. Do they have any real-world examples of how Gen Studio is being used?
They do during the earnings call. Adobe highlighted how Pepsi is using Gen Studio to let customers personalize their Gatorade bottles. You could imagine adding your name or a special message.
That's a fun example. It definitely grabs your attention.
Another example they cited was Tapestry, a fashion house that owns brands like Coach and Kate Spade. They're using Gen Studio to streamline their content production and create personalized experiences for their customers.
It sounds like Gen Studio is still in its early stages,
Mm,
but the potential is huge, especially if they can truly deliver on that promise of personalized content creation at scale.
definitely. And it's a key piece of Adobe's broader vision for the future of creativity.
All right, we've covered a lot of ground here. Adobe is firing on all cylinders when it comes to AI innovation, but the market seems a bit uncertain about their future growth prospects.
Well, I think it's a combination of factors. As we were saying, investor hesitation is likely a combination of factors. First, the technology is still evolving rapidly. Generative AI is a relatively new field, and there's still a lot of uncertainty about how it will translate into revenue for companies like Adobe. Investors are looking for clear signs that these investments are paying off.
So it's not just about building cool tech, it's about proving that this cool tech can actually drive meaningful business growth.
Exactly. And second, there's intense competition in this space. Microsoft, Google, and a whole host of startups are all vying for a piece of the AI pie. Investors are trying to figure out which companies have the strongest long-term advantage.
It's a high-stakes race to the top. Okay, so we've got this tension between Adobe's ambitious AI strategy and the market's desire for more certainty about their growth trajectory. How is Adobe trying to navigate that challenge?
Well, during the earnings call, Adobe executives emphasize their commitment to what they call their P times Q plus V growth algorithm.
P times Q plus V. Sounds a bit like a math equation.
It is in a way. P stands for attracting new users to their platform. Q represents increasing usage among existing users, and V focuses on providing more value to justify higher prices.
So essentially, they're trying to grow their user base, encourage people to use their products more often and for more tasks,
Yeah.
and then offer premium features that people are willing to pay extra for.
Exactly. They're using a combination of strategies to achieve this. For example, they're offering freemium versions of some of their products like Adobe Express and Lightroom. This allows them to draw in new users, get them hooked on the Adobe ecosystem, and then potentially upsell them to paid subscriptions with more advanced features.
It's a classic strategy, but it seems to be working well for them.
It is, and it allows Adobe to cater to both casual creators who might be experimenting with these tools for the first time and serious professionals who need the full power of Adobe's Creative Suite.
Okay, so that explains how they're trying to drive user growth and engagement.
Mhm.
What about the V part of the equation, providing more value? How does AI play into that?
Well, the idea is that AI can enhance the value proposition of their existing products by making them more powerful and easier to use. For example, the AI assistant in Acrobat can help you complete document-related tasks much faster. That's a tangible benefit that users can experience directly.
Right. It's not just a theoretical concept. It's a practical improvement to their workflow.
And similarly with Firefly, they're adding AI-powered capabilities to apps like Photoshop and Premiere Pro. This allows users to do things that were previously impossible or extremely time-consuming. For example, you can use Firefly to quickly generate different variations of a logo design or to remove an object from a video clip with just a few clicks.
So they're baking AI into their products in a way that makes them more valuable and efficient for users. And that, in turn, can justify charging a premium for those enhanced capabilities.
Precisely. But there's another layer to this. Adobe is also betting that AI can unlock entirely new revenue streams. That's where Gen Studio comes in with Gen Studio. They're aiming to help businesses create personalized content at scale, which is something that wasn't really feasible before.
Okay, so They're not just improving existing products, they're also exploring new markets and use cases that are only possible with AI. That's a bold move.
It is, and it remains to be seen how successful they'll be. But the potential is enormous.
All right, so we've got this P times Q plus V framework, which seems to be the guiding principle for Adobe's growth strategy. But let's talk about the elephant in the room, their 2025 financial guidance. They're projecting revenue of $23.30 to $23.55 billion, which, while still representing growth, is a slower pace than what they achieved in 2024. What do you make of that?
I think it's important to put this guidance in context. Adobe has been on an exceptional growth trajectory over the past few years, fueled in part by the pandemic, which drove a surge in demand for their digital tools. That pace of growth was probably not sustainable in the long run.
So a bit of a course correction was inevitable.
Exactly. And remember, they're still projecting growth. It's just a slightly more moderate rate than what investors had become accustomed to.
Right. It seems like the market is fixated on that deceleration, even though the overall picture is still quite positive. Do you think investors are being overly cautious?
It's hard to say. Investors are always trying to anticipate the future, and they're naturally going to be sensitive to any signs of a slowdown, especially in a company that has been growing as rapidly as Adobe. I think it's reasonable to be cautious, but it's also important to recognize that Adobe is still a very strong company with a lot of potential.
All right, so we've got record revenue, a bold AI strategy, a plan to balance growth with monetization. What's not to love? Why are investors still hesitant?
Well, remember, Adobe's 2025 financial guidance was a bit more cautious than analysts were hoping for. They're forecasting total revenue of $23.3 to $23.55 billion.
Which, while still representing growth, is a slower pace than what they achieved in 2024.
Correct, and that's what likely spooked investors and led to the stock drop.
It seems like the market's worried that Adobe won't be able to maintain its current growth trajectory.
That's the million-dollar question, however, during the earnings call. Adobe executives emphasized that they're prioritizing long-term growth through user acquisition and innovation.
Instead of chasing short-term revenue targets, got it. They're playing the long game, hoping to solidify their position as the leader in AI-powered creativity.
Exactly. Which makes sense in a rapidly evolving field like AI, where the technology is constantly changing and new possibilities are emerging all the time.
It's a gamble, but it could pay off big time if they manage to convince investors that their AI-powered future is bright. And speaking of gambles and bright futures, it's time for our This Is Not Financial Advice segment, where we throw out a wild but plausible trade idea.
Okay, game on. What do you have for us today?
What if Adobe spun off Firefly as its own publicly traded company?
Whoa, now that's a thought-provoking idea.
Right, imagine a pure-play generative AI company focused entirely on ethical and commercially safe content creation. It could be a game changer.
It would definitely grab the market's attention. Investors are hungry for AI exposure, and Adobe's commercially safe approach could be a major differentiator in a landscape that's getting increasingly crowded.
Exactly. Think about it. Firefly could become the go-to solution for businesses worried about the legal risks of using AI-generated content. They could even license their technology to other companies, expanding their reach beyond Adobe's ecosystem.
That's a fascinating possibility. It would allow Firefly to forge partnerships and integrations that might not be feasible if it remained tied to Adobe. And it could potentially attract a different type of investor, one who's specifically looking for pure play exposure to the generative AI space.
And imagine the potential for innovation. If Firefly wasn't constrained by Adobe's existing product roadmap, it could explore entirely new applications for generative AI. Maybe they could develop tools specifically for the metaverse or for creating immersive experiences.
It's certainly a compelling idea. Of course, there are always risks associated with spinning off a business unit. Firefly might lose some of the advantages it currently enjoys as part of Adobe, such as access to their vast customer base and distribution channels.
True. But it's also possible that a standalone Firefly could move faster and be more agile in responding to market changes.
Yeah.
And they might be able to attract top talent in the AI space who are excited by the prospect of building something new and disruptive.
It's a trade-off for sure, but it's a trade-off that Adobe might be willing to make if they believe that Firefly has the potential to become a major player in the generative AI market.
Of course, this is all just speculation. We're not financial advisors.
Yeah.
And this is definitely not investment advice.
Right. It's important to remember that. But it's fun to consider these what-if scenarios and explore the possibilities.
It helps us think critically about the market and the forces shaping the future of technology and creativity.
So to wrap up our deep dive into Adobe's earnings call, it's clear that AI is at the heart of their strategy. They're making significant investments in this space, and they're aiming to position themselves as the leader in commercially safe content creation.
The market seems a bit uncertain about their future growth prospects, especially in light of their 2025 revenue guidance. But Adobe's financials are strong. They're innovating at a rapid pace, and they have a clear vision for the future.
It's going to be an exciting journey to follow, and as always, we'll be here to break it all down for you.
That's right. Thanks for joining us on this deep dive into Adobe's earnings call. Until next time, keep learning, keep exploring, and keep those what-if questions coming.